Hello, Guido here from blockbuilders.net, and today I want to show you how you can trade on Bybit. So Bybit is basically one of the biggest cryptocurrency exchanges in the world. They started out as a derivatives exchange where you could trade derivatives, so future contracts. And by now they also have spot markets, so where you can trade, so buy and sell cryptocurrencies. And they also have a huge part that they call finance, where you can earn some interest on your cryptocurrencies. And I want to show you today how that all works. If you don't have a Bybit account yet, I put a link down in the description. If you use that link to sign up, you can actually participate in countless promotions that they do. So first of all, you don't need to verify your identity if you want to trade on Bybit. You just need to sign up with an email address, and that's basically it. But then there are certain limits if you're not verified. So basically, the most important one is that you are not allowed to withdraw more than 20,000 US dollars or cryptocurrencies worth 20,000 US dollars per day. And in a month, you are not allowed to withdraw more than 100,000 US dollars. So cryptocurrencies worth more than 100,000 US dollars. That's basically the main limit. The other limit is that you are not allowed to buy cryptocurrencies with regular currencies like euro, for example, or British pounds. And you are not allowed to use regular currencies on here if you are not verified. So you have to decide on your own if you want to verify your identity or not. However, even if you are not verified, you can do a lot already. So once you have an account, the first thing you need to do is you need to deposit money. And the easiest way to do that is just click on assets here and then deposit. And there you can basically deposit any cryptocurrency that is traded on Bybit. So there are currently more than 300 currencies traded on Bybit. And so you can basically deposit them all. For example, you can deposit Bitcoin, acknowledge, and then they basically give you an address where you can send the Bitcoins to, or you can do Ethereum and so on. And there you can send the Ethereum to that address. So that's basically it. And besides that, there are also several ways to deposit regular currencies like euros, for example. And one way to do it would be one-click buy. So you can basically say, okay, you want to buy Bitcoin, for example. Bitcoin, and then you can just need to specify how much you want to buy, and then you can choose several options here. However, you have to keep in mind that all the options are quite expensive, so you are usually ending up paying around 4%, a 4% fee. And even if you're using Google Pay or a regular bank transfer, it's still around 4% as a fee. The only option to do it cheaper is basically do a fiat deposit here and then basically use ADV Cash. That's basically a service where you can, it's like an online bank. And you can basically deposit money with them, and then you can send it for free to Bybit. And if you deposit some money here, so for example via bank transfer, they only charge you $1. Then you can send it for free to Bybit, and then you can use it on the exchange to trade there. So that's basically the cheapest way. And you can also withdraw it with them. Yeah, and they charge you, I think, I'm in Europe, so it's around €5 for the withdrawal to a bank account and 0.5% as a fee. So that's basically it. However, if you want to withdraw crypto, you can also withdraw crypto from Bybit. So for example, what I do most of the time is I have a Coinbase account too, and it's pretty cheap to withdraw money from Coinbase. It only costs like 15 cents, and depositing something there is free via bank transfer, or you can also use PayPal. And so most of the time I just send some money to Coinbase, transfer it to Ethereum and send it over to Bybit, trade there, and if I want to withdraw, I just send it back to Coinbase, exchange it there, and send it back to my bank account. So once we have some money on Bybit, we can basically look at our assets here, and as you can see, you have several wallets. I have a unified trading account. However, if you are starting out, you probably don't have that. You would have more wallets here. So you would have one for spot trading and one for futures trading. And you can always send money from one wallet to the other. And it doesn't cost you anything. And it's an instant transaction. So you don't have to wait until the money arrives. It's just like some security measurement here, because if you are trading and you get liquidated, and you can't use money that you have in your funding account. You can only use the money that is in your unified trading account. So keep that in mind. So if you want to start trading, the easiest way basically is to do convert here. So what you can do is just use the currency that you have and make sure it's in your funding wallet. And then you basically can say, okay, I want to trade Matic against USDT. And then you just have to specify how much Matic you want to sell. And then it gives you a price estimate here, and then you can just click convert, and you would automatically get USDT here, or any other currency, whatever you want. So that's the easiest way. Besides that, you can also use the regular spot trading interface. And there's a difference between spot trading and derivatives trading. So spot trading is basically you buy a cryptocurrency and it's yours. You can withdraw it from the exchange, and you can send it somewhere, and you can do whatever you want with it. If you do derivatives trading or futures trading, you're basically just buying a contract on the price of a certain cryptocurrency. And the advantage with that is that you can use leverage. If you trade Bitcoin, for example, as a futures contract, you can use up to 100x leverage, and you can even short a cryptocurrency. So if you think the price will go down, you can short it. So that's basically the main difference between spot trading and derivatives trading or futures trading. So keep in mind, if you want to hold a cryptocurrency for a long time because you think the price will go up, you would always use spot trading. And then you have the chart here. You can select the cryptocurrency that you want. So for example, Bitcoin. And then you have the chart here. One candle is 1 hour. You can change that to 5 minutes or 4 hours or whatever you like. Then you have the order book here. In red, all the sell orders, and in green, all the buy orders. And here you have the most recent trades. And then you can basically buy or sell. Of course, you can only sell if you would hold some Bitcoins here. And so with spot trading, we can only buy right now because we only have USDT. And then you need to specify if you want to do a market or a limit order. And it's fairly straightforward. A market order, you just say how much you want to buy. So for example, I want to invest half of my money in Bitcoin, and I click buy BTC, and it would automatically buy the BTC for me and for the best price available, and would put it in my unified trading account. If I do a limit order, I can specify the price. So I can say, okay, I want to buy Bitcoin with half my money. If the price drops to 25,000 USDT, and then I click buy BTC, and then you can basically see I have an open order here that says I will buy Bitcoin if the price drops to 25,000 USDT, and if the price drops to that level, it will automatically fill that order. If the price never drops to that level, it will never fill that order, and of course I can cancel it anytime. So that's basically spot trading. And now we have a look at derivatives trading. And there are several contracts that you can trade. The most popular ones are USDT perpetuals, and then there are USDC contracts and inverse contracts. And the difference is basically what you are using as collateral. So with USDT perpetuals, you are basically using USDT, as the name already suggests, and you need to have some USDT. in your account, and if you do a successful trade, you will increase the number of USDT you have. With USDC, you need to have USDC. It's basically similar to USDT. However, there's not much liquidity right now for USDC contracts, and Bybit will probably stop with that in the future. So you should focus on USDT perpetuals. And then there's something that they call inverse contracts. That basically means instead of USDT as collateral for your position, you can also use Bitcoin or Ethereum or other cryptocurrencies. And if you do a successful trade, you are basically increasing your Bitcoin stack. However, it's still not as popular as USDT perpetuals. And perpetuals basically means that the contract is open for an unlimited amount of time. So you can technically leave your position open forever. And we are now at the BTC USDT perpetual contract, and you can see it basically looks very similar to the spot trading. You have the chart here, you can change the candles here, the order book, all the sell orders, all the buy orders in green, and here you have your positions. So here you can select your leverage, and I wouldn't recommend using a higher leverage than 3. However, you can use up to 100x leverage, meaning if you open a position and you have 1000 USDT in your account, you can technically open a position worth 100,000 USDT. So actually quite a lot. However, you would get liquidated if the price moves 1% against you, because then you only have 1000 USDT as collateral. Then the position wouldn't have enough collateral anymore and they would liquidate you. And here our margin mode right now selected means is cross. So you can also select isolated margin. That basically means you can only use the money that you are like selecting for that position. And with cross, that means you can use all the money that you have in your current trading account. So for me, it would be the unified trading account. So I would recommend using isolated margin when you start off. So that's basically it. And then I can do a market or limit order. And the market order is basically me saying how much I want to invest, like 50% of the money I have or whatever, 10%, and then I click buy long. And as you can see now, I have an open position now. With the money I invested, and you can see the realized and unrealized P&L. That basically means the realized P&L is what you paid for opening the position, and the unrealized P&L is what you would get if you would close the position right now. The price didn't move yet, so I wouldn't get anything. However, I can close the position at any time if I click market or with a limit order. 100%, confirm. And of course, I can also do a limit order here and say, okay, if the price drops to 25,000 or 26,000, I want to invest a certain amount of my money and then go long. And of course, I can also go short. If I click on sell short here, I would basically bet that the price will go down. So that's basically futures trading on Bybit. There are a lot of other things you can do on Bybit. So one thing I want to show you is copy trading. So you can basically click here and then you can see other traders. You can see how successful they were and their return on investment for the last 7 days in percent, how much money they have under management, or how much money people invested in trading there. You can see how much they basically went down during that time with their position and so on. And you can just click copy here. And then you can automatically, or then it will automatically copy all the trades that they are doing. And you can also, when you click on them, see what trades they did, what cryptocurrencies they traded, and so on. So you can see their win rate. So a lot of stuff that you can actually see there. And you can also try that out. Besides that, there's also something that they call Bybit Earn. It's very similar to Binance Earn. That's why I messed it up. And however, it's Bybit Earn, and you can basically select any cryptocurrency and can see if you would get some interest on it. And so, for example, with Bitcoin, there are several ways to earn interest. You can invest it here in flexible savings and earn 1.5% interest per year. And however, with flexible, that basically means you can get your money back at any time, or you can invest it for a fixed period of time, and there you can earn up to 1.8% interest per year. It's always per year here. And then they have something that they call dual assets. It looks very attractive here. However, I can promise you won't make 700% here, because it's more like an option play, and they promise you money, but you never know what currency you will get paid at. So if you invest Bitcoin, it can happen that you get the money you made back in USDT, and however, if Bitcoin made a huge price jump, you are missing out on that, and so on. It's a bit complicated, however, be careful with that. And liquidity mining, it's basically similar to Uniswap, where you can also earn some interest. And that's basically it in terms of Bybit. If you have any questions about it, please feel free to use the comments down below. If you find that video helpful, please hit the like button and subscribe to my channel. And if you don't have an account yet, use the link down below to sign up and take part in the promotions. Thanks for watching.